Hey everyone, it's Mozart here, just checking in at night. A. M. D. And Google reported fine, but not within market expectations, and their stock dropped about 8 to 9%. Everyone, that Nasdaq dragged along with it, which dragged along with it and in general. Well, all these technological assets, including crypto, in short, the remainder, long. 1/3 of the position got stopped out at break-even at $97,300. We took almost 5% profit on 2/3 of the position. Considering this is X2, we multiply by 2, so we took off a little over 9%. That's good. I hope you understand why I did this. Because such rebounds, as a rule, occur with candles retesting some part of that candle before the next move up. I wanted to quickly take some profits. Here's 101,650. I closed 2/3, and the rest got stopped out at break-even. What now? So, take a look at how it looks right now. This is the Bitcoin chart on a 4-hour time frame. We have this diagonal support line here, and there's this little thing, 1, 2, 3. A channel with one false breakout, which happens in history, not always, but more often than not. Statistically, about 70 to 75 to 80% of the time, you might see a situation like this, 1 or 2, false breakouts, a return, and then consolidation, before moving up. This happens with a certain probability. Terrorist, well, 65 to 80%. I'm just saying that conditionally. It's purely based on what I've seen. Not 100%, of course, but way more often than not. Considering that the whole point of trading is about probabilities, it makes sense to look at going long, right from the current levels. So, we tested this thing out. 3rd time. Perhaps we'll press closer to it a little bit, go somewhere to 95 to 94, right here, and then bounce back from here. Quite strongly, or directly from the currents there. For now, this option is my priority, but with the probability that I mentioned, I am ahead of the plus. By the way, we have the monthly S3 pivot here, which is currently holding at around $96,000. And plus, we tested this descending orange channel. So, considering all these factors, as well as the latest correction from peak to peak of over 17%, I re-entered a long position at the same price. 97,300. What was my average? But back then, it was on double the volume from the last long position. And right now, it's just on a single volume. Right now, the price is 97,500. It's pretty much the same thing. I re-entered at 97,300. What are my next thoughts? Where should I set the stop? My thoughts are that I'll set the stop right here, at the S3 from last month, below these 2 wicks. Because if we close below these 2 wicks, the likelihood of testing 85 will be extremely high, or even lower, where we might drop down to here, and then we'll go away. Up to here. The probability seems small, but it's there, so what's my plan right now? At 97,300, I entered with a single volume, which means it's about 2% of my deposit. So, the stop is set at 97,300. So, under the S3 from last month, around 9%, let's just set it right away like this. So, I'll draw a line at $88,500 with a buffer like a 2% cushion, 2%. The deposit, this distance here. Please calculate your position correctly so that it equals 2% if the price reaches that line. And it's important to note that we don't close the stop just because it touches that line, but rather based on the daily candle closing below that line. Yes, it can close lower and it will not be minus 2% of the deposit, but minus 2.5. But nevertheless, in most cases it works to our advantage and where it has taken everyone out. It didn't take me out on these shadows, that is, because I'm waiting for the candle to close. And I, on the contrary, make money. Because so, looking at those same 2% up from the deposit, I mean, plus or minus, we could return to those highs, somewhere around $100,600. Whether I will wait $4 106,000 again or not, I don't know. You need to look at how the candles will behave each next candle, how it will close, on what volume, what happens during the day. There are a lot of factors that I can't tell you right now, and I can't say for sure if it's definitely going to go up or down. I can talk about different scenarios every day, and I might even change them several times throughout the day. Because this reading doesn't have a specific probability attached to it. We're not talking about investments, we're just talking about trading, and that's how it is. The plan is, if we happen to come here and I get stopped out, I'll lose 1%. A standard position is referred to as 2%. I usually enter the deposit around this level, close to the marks of 85 at 2%, which means I'm already at 4% of the deposit. Well, at these same levels, somewhere closer to the marks of 85 at 2%, which means I'm already at 4% of the deposit. This is my plan with a stop somewhere around here. There's a small chance it could bounce back from this low consolidation area right here. Or from here it is extremely high, because in this case Bitcoin will make a correction of 30%. Which is a lot, even by the standards of 21, where there was not as much liquidity as now. This is the plan for Bitcoin. Whether to go along with me or not, decide for yourself. I won't average here. If it closes below 88, you see, I'll get stopped out, and whatever, I'll just re-enter at 2%. The overall plan is still to go up. From my perspective, this is a consolidation that might touch again this green moving average, and again, the orange descending channel. Could it touch the lower boundary of the white channel again? I don't know. It's unlikely because overall, we've pretty much touched it right here. And to cover this candle on such a volume now for the market would be a disaster. That is, if we cover it, we will go here, most likely. And so this is consolidation within the flagpole. That is, what I expect here after consolidation, where the exit will come from, let's say, from here to the height of this flagpole, and this will be the last point of growth before a deeper correction. For now, that's my plan, and again, I'm speaking from my observations, my trading experience, and what I've seen in the markets. And of course, from my trading system. Additionally, the selling ratio of long-term holders within the 15-day window is around the classic average line. A little, and not too much. The basic standard that signals on regular markets about. In a sideways market, and in a regular sideways market, where there are NO, prevailing sales, non-prevailing purchases, first and foremost, an index of stablecoins that are currently listed on exchanges. Before the coining, these histograms of the green bars have fallen, but they are positive after all. And if we look at just this one line, it is growing. This is the total number of stablecoins on all exchanges, meaning there is demand for them, meaning someone needs them. That is, someone is buying up crypto at the current falls. At the current marks, this is also a plus. Then, what I showed in the last video, why did I gain a position with us? The average purchase price of the base cohort of short-term tenants of 1 to 3 months is around 96,500, so the price may still go down there. The day before yesterday, we bounced back strongly from there, which is why I always keep an eye on this line in the context of long-term trends. It serves as a very strong support. We bounced back strongly from there, and now we're circling around it again. Funding rates, meaning the funding rates broken down by day yesterday. Or rather, the day before yesterday, February 3rd, for one day. We dropped to minus 0.001%. I said earlier that, on the daily basis, it is extremely undesirable to go into negative funding, since this will already signal a shift in balance. But, for now, we're waiting for a positive outcome. If we look at the hourly breakdown again, we had this shift in funding after Bitcoin bounced back a little bit from their lows when Trump changed his mind about imposing tariffs on Mexico and then on Canada. They tried to short this bounce, but it didn't work out. In the end, everyone got wiped out and the market flipped back to long. So for now, that's acceptable. Here's my forecast, personally for me. And what do you do with it accordingly? What do you think is necessary for everyone? Thanks for tuning in. This was Mozart, and see you later.